In the next 12 months, 4 companies are going to raise more money from public investors than entire countries raise in a year. You're going to see the headlines. Biggest IPO ever. Retail investors finally get a seat at the table. Your uncle is going to text you about it. Your finance bro co-worker is going to corner you at lunch about it. And almost none of you are going to make money on it. Not because these are bad companies. Some of them might be the best companies on the planet. You're going to lose money because of something nobody's putting in the headline, the order in which people get to sell. Here's what's actually happening right now. A wave of AI-era companies, a chip maker, a rocket company, and the 2 biggest AI labs on Earth are either already public or getting ready to be. Combined, we're talking about a group of businesses worth more than most G20 economies. The first one already went public a few weeks ago. It priced below where bankers said demand was. It opened nearly double that price on day one. Everyone celebrated. Financial news anchors did that thing where they get weirdly excited about a number going up. And then, less than 48 hours later, it had already given back a chunk of those gains. That's not a glitch. That's the business model working exactly as designed. And if you understand why that happened, you'll understand exactly what's coming for the next 3. Much bigger IPOs lined up behind it. An IPO is not really a sale to the public. It's a very carefully staged handoff. Think of it in 3 waves. Wave 1, the employees and early investors who've been sitting on paper wealth for years. They didn't get in at the IPO price. Some of them got in when the company was worth a fraction, sometimes less than 1% of what it's worth today. Wave 2, the big institutional funds. The pension funds, the mutual funds, the hedge funds with a direct line to the investment bank running the deal. They get their shares at the official IPO price before the stock even starts trading publicly. Wave 3 is you. You get to buy the stock after it's already jumped on the open market from people in Wave 1 and Wave 2 who are already deciding whether today's the day they cash out. So when a stock pops 60, 80, 100% on day 1, that's not the market falling in love with the company. That's Wave 3 paying Wave 1 and Wave 2 a very large exit bonus. Here's the part almost nobody explains properly. Insiders aren't even allowed to sell on day 1. There's something called a lockup period, usually around 6 months, where employees and early investors are legally barred from dumping their shares. So, for 6 months, the float, the actual number of shares available to trade, is artificially tiny. A small amount of demand chases a small amount of supply, and the price gets pushed way higher than it probably should be. It feels like the whole world wants in. In reality, the whole world can't get in yet, which is exactly why it looks so hot. Then the lockup expires. All that supply that was legally frozen suddenly hits the market at once. Insiders who've waited years, sometimes a decade, finally get to turn their paper wealth into an actual bank balance. And what happens to a stock when a wall of new supply shows up with no matching new demand? It drops, predictably, almost every time. That's not a conspiracy theory. You can go look at the price chart of pretty much any hyped IPO from the last 3 years around its lockup date. The pattern repeats so often it's basically a law of physics at this point. Normally this is a story about one overhyped company. What makes this current wave different is the scale. We're talking about companies with combined valuations pushing past $3 trillion, all trying to go public in roughly the same 12-month window. And in almost every case, the actual amount of stock available to regular investors on day 1 is a small sliver of the company, which means the float problem I just explained isn't a side effect here. It's the entire strategy. A small float against enormous demand and enormous media hype is a machine built to produce a spike, and every machine built to produce a spike is, by definition, also built to produce a crash. Add in the fact that some of these businesses are burning enormous amounts of cash to build the infrastructure the whole AI boom depends on, and you've got a very simple recipe, unbelievable headlines now, and a very uncomfortable lockup date circled on a calendar 6 months from now. So does that mean don't touch this sector at all? Not necessarily. It means changing when and how you get exposure. Move 1. If you can actually get shares at the true offer price, through a broker with real allocation, not the open in print? That's a completely different trade than buying after a stock has already doubled. Move 1. If you can actually get shares at the true offer price through a broker with real allocation, not the opening print, that's a completely different trade than buying after a stock has already doubled. Move 2. Buy the family, not the headline. Nearly every one of these companies already has public backers you can buy today. Cloud providers, chip makers, and partners who own meaningful stakes and don't come with a lockup expiration hanging over them. You get exposure to the same growth story without gambling on day one pricing. Move 3. If you do want to own the actual stock, mark the lockup expiration date and treat it like an earnings report. Historically, that's when these names trade closer to what they're actually worth, not what the hype priced them at on day one. The uncomfortable truth is that patience is the entire edge here. Everyone else is going to be buying the excitement. The people who actually make money are the ones willing to wait for the excitement to wear off. None of this means these companies are frauds. It just means biggest IPO in history and good investment on day one are two completely different claims, and Wall Street has gotten very, very good at making you confuse the two. If you want the full breakdown the moment any of these actually files, the numbers, the lockup dates, all of it, that's exactly what this channel does. Subscribe and I'll see you before the bell rings on the next one.
Subscribe, and I'll see you before the bell rings on the next one.